What's up, everybody? We be talking about some crypto today. Alright, anyways, what's up, guys? I've just been being a goofball singing in the mic for like 5-10 minutes. Anyways, this is Tyler with Bedrock, and I wanted to give you guys a market update. So this is my own opinion. It's not financial advice, of course. Just saying that out there for all the attorneys. So we have quite a bit of things that have been happening, right? I have my little notebook here. We're going to talk about what's going on in the market. Obviously, we're going to talk about Terra and just kind of the short-term perspective, what I think is going to happen in the market. So let's talk about it. All right. So first off, with the markets, it goes up, it goes down, obviously. Terra, though, happens to be a token that everybody knows that went basically to $0, right? It's under a penny now. It went from over $100 down to 0 in 48 hours. And what happens, or why first off, did anybody get into it? And then secondly, what caused it to crash? So a stable coin or a stable token is something that is supposed to be safe. It's something that's pegged to the dollar, and it's not supposed to fluctuate. Well, the last couple days, that apparently proved itself wrong. Like, that thing just blew the heck up, right? So what Terra did that's a little bit different than most stable coins, I guess I should tell you what happens with the stable coins. Like BUSD, for example, is a stable coin, and they mint it, so they create it, or they burn it. And when they burn it, the reason they would burn it is just because if they have too many people putting money into it, and they need to reduce that supply, that's what they're going to do, right? So that's their job, to keep it stable, keep it at $1. So Terra did something different. They had their own token that essentially, every time someone would buy it, it would also buy a little bit of UST. And with that happening, they would pay people out 20% annually on a stable coin, which is insanity to like have I mean, it's possible, but like the way that they did it didn't make any sense. And we had a kind of a group that decided to prove it and put it to its own test. So right now, I don't think that the market, the reason like that it's going down, in my opinion, is just because of what's happening with Luna. So I want to show you guys actually a couple things really fast. I'll just take a quick peek at the markets. Oh, it's not looking good. Yeah, it definitely does not look good. Yeah. Thank you, Luna. We appreciate, actually, we don't appreciate that this is happening. But it's all right. I actually think this isn't a bad time to buy at all. I think this is actually a great time for everyone to, potentially put in a little bit of money. I'd put in maybe maybe like 25% or something, if it was me, of what you're wanting. And we're going to explain why, because I still think there might be some possible downside. A lot of people like to look at charts. I'm not really a guy that looks at charts too much. I will here and there, but I like to look more what's happening with economics and what's going on in the real world, because the trends and the news are really kind of what pushed us up in this whole thing. But first, let's kind of hear what we got going on. All right, so let's listen to Mr. Corey for a second.
Doesn't matter.
Out of all the stable coins out there in existence right now, which ones give you the most cause for concern?
I think algorithmic stablecoins are particularly vulnerable because of their design.
For a lot of algorithmic stablecoins like Iron Finance, Basis Cash, ESD, DSD, the main problem wasn't that they had an on-chain programmatic monetary policy. The problem was that the incentives that they were giving to get people to hold the algorithmic stablecoins was not sustainable.
And how was yours? 20% from where? Like, I guess if you're taking it from Luna and you're going to pass it over to UST, like, okay, maybe, but no.
This is essentially a Ponzi scheme whereby...
Yeah, it's just like yours was a Ponzi scheme, buddy. So, let me show you guys kind of how this works, all right?
The coins were originally thought up by Do Kwon, a 30-year-old Singaporean and Stanford dropout who launched the coins in 2018. Both Terra and Luna are supposed to act as a balancing mechanism, where one is automatically created or destroyed based on the supply and demand of the other. If UST ever fell below $1, arbitrageurs would buy UST and then buy Luna at a discount, which would prop up the price of UST. If the opposite happened and UST went above $1, people would use their Luna coins to buy UST and resell them on another platform, which would bring the price down.
Okay, so I guess I'll let it play out a little bit more. Yeah, we'll keep going. Hold on.
Summarize, when Terra's value drops, Luna holders are supposed to automatically trade in their coins, which props up the price. A clever system, but one that only worked on paper. Some are blaming the sudden drop because of a large entity who may have dumped billions of UST into the market, which...
Yeah, exactly. So, some organization or group of people decided to buy a lot of UST, and they also bought a lot of Luna, and they wanted to prove that this wasn't stable. So what did they do? The first thing you have to do is you break the peg of the US dollar. Yeah, exactly. So if they sold a lot of UST, what happened initially is it broke the peg, and it's been broken before where it went down to 94 cents, and then of course what they have to do is basically use their Luna to pump the price back up, right? So once you have a big sell-off of USD, all of a sudden people have to sell the Luna to put the money into the USD to keep it stable. And this price went down quite a bit, right? And so what happened is somebody sold probably their first billion of the $4 billion that they were selling, and they broke it. And then all of a sudden people started to panic, like, what's going on? Later that day, it went down to 60 cents on the dollar. So something that was supposed to be worth $1 is now lost 40% within just a few hours. Like, it was insanity. So then the Luna coin itself, the Terra token, right? That started to go down as well to cover off the losses. And then what ends up happening is, I think Luna kind of knew that this was potentially going to happen because they had massive reserves of Bitcoin. So they had been buying up billions of dollars of Bitcoin. So as the price continued to grow, I think they could continue to pay that 20%, right? And that was just kind of a bet that didn't work out so well. Yeah, it didn't, like, clearly. So by having these guys, now they've dumped billions of dollars. You know, their price of Luna is tanking to try and push this price up. Meanwhile, these guys are now continuing to sell more and more of the UST as they're trying to push it back up. They happen to have more money than the Bitcoin reserves that Luna had, right? So if they started with $4 billion, Luna was only able to push it back up quite a bit. Now you have news media going out. Everyone's freaking out. And they're like, oh, it might come back to $1. It might. It didn't, right? So then they start selling, and it creates panic in the market. So when you see this, this is the reason why Bitcoin went down. It is kind of speculative, though. In my opinion, that the day interest rates went up, Bitcoin decided to climb massively. And I think it's my own opinion, but I think potentially the Fed wanted this to happen to try and make it where the dollar looks good again. Even with all the inflation going on, we told you, the dollar is king. Well, it's not, right? We all know that it's not. They just keep printing and minting more as they want to, and it's just debt, right? So the more debt they bring on, the more dollars that they can have. And so essentially here, it says investors turn away from crypto as interest rates rise and Bitcoin falls. I think it's possible that somebody really wanted this to happen on purpose, right? And so do I think that Bitcoin is going to zero? No, I absolutely do not think that's going to happen. Is there a possibility, though, that it's going to continue to go down? Yes, there is. Just like it could potentially go back up, which long term it's going to continue to grow, in my opinion, unless there's some crazy regulations that come out. But even that, you can't stop it. It's the people's money, right? And it's very hard to regulate that. So anyways, interest rates went on a rise. They raised 0.5%. Bitcoin went up, but then the next day this big crash happened, right? So let's talk about why I think Bitcoin is going to potentially be good in the long term, but in the short term, why it might continue to drop. And so this article kind of talks to us about the biggest corporate holders of Bitcoin It's kind of a cool headline. It's not Square Tesla. Like a lot of people, they all know that. This is kind of cool to see. This is a more recent article, or not more recent. I'm going to show you guys a more recent one. This is kind of at the beginning of the year. But MicroStrategies is a tech software, right? And so they're public. These are all publicly traded companies that you can buy on the stock market. MicroStrategy is number 1. Number 2 is Tesla. That's pretty cool. And then Square's number 4. And they go down, 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 down. So look at this number right now. MicroStrategies, they almost have a full 1% of the total supply. So they were earlier this year, 121 million. And if we go and take a look today, they are now, oh, right here. I'm like, where'd it go? 129,218. So with this dip that we had, they saw a good buying opportunity. That to me is a good sign. However, a lot of these other companies are in the tech industry, and a lot of times, like we just had a 22% in the Nasdaq that dropped, like in the stock market, right? And so it went down, and a lot of tech companies, what they do is they buy crypto to kind of offset whatever's happening in the stock market. So if the stock market tanks, a lot of times these guys actually will sell their cryptos to pump their price back up. And that's kind of what they use. So short term, I could kind of see that happening. I do, though, think that right now is a great buying opportunity for anyone that was waiting for a dip. This is a great time to go in, in my opinion. So do your own financial research, of course, but I wouldn't say dump it all in. I'm not dumping it all in, but I definitely picked up a little bit more. I thought this was a good time to get in. But it wasn't supposed to happen like right away. We all kind of had an idea. Maybe when the Fed raises interest rates, it might happen. Because a lot of people don't know. They don't understand that when you raise your rates, oops, I didn't mean to do that. When you guys raise your rates, or when the Feds raise their interest rates, what happens a lot of times is the rest of the interest rates for car loans, for homes, obviously the home value, when those homes go up, for cars, planes, whatever you guys are buying. Probably you guys aren't buying planes and stuff, so that's a dumb analogy. But every single other loan is going to also follow it. So these 0% interest rates that we've had for quite some time, money, it's going to go the opposite direction. And that's just kind of how they control the inflation. So anyways, that's my own 2 cents on it of kind of where I think it's going to go. When we look at Bitcoin, on this chart, I'll look at it, just something like this, but I'm not going to draw lines, and it's good to see support and things like that. But more for me, I like to look at the trends in the market, just kind of see what's going on out there in the real world. So that's my market update for you guys. All right. Lastly, I want to talk a little bit about Bedrock. So this is kind of why I created Bedrock. And the reason I created this is I saw a dire need for something out there in the industry. When I used to sell solar panels, I was a door-to-door sales guy for a long time, selling solar. Did a great job, and then I jumped into marketing. I started doing lead generation. I took a company from basically doing a little bit in sales all the way up to doing over $1 billion in sales through online advertising. And so with that, I saw a need of when I'd knock doors, right? And I'm like, this sucks. So then I started buying leads, and I did really well with that, right? So I would buy some leads, and I would go and sell them. But then I had to wait like 2 or 3 months sometimes for the panels to install and get paid. So there was this waiting period. And so what I've done is I've kind of created this platform that's for crowdfunding. And it's more along the lines of getting rid of, or not having a place where you can just ask your dad, hey dad, can I get a loan from you, right? Like, he was cool. I'm not saying he wasn't cool, but I'm just saying not everybody has that opportunity to do that. And also, if you didn't pay him back, he'd be kind of pissed off. So this is a cool way for any business or individual that's looking to raise capital, and also a really cool way for the community to actually get paid interest on real money, not a fake 20%. We're talking about you giving your cryptocurrency to another person that can use it, make more money, and then you get paid back and earn interest on it. It's a win-win for everybody. It's a beautiful thing. All right. So some updates we have on here now. We actually are now showing you guys the different amount of time. So this is saying for a 1 month stake. So some people that buy the Rock token, You can actually stake your tokens and earn more rock tokens. That's only for a limited time because we are a fixed supply token of 500 million. So this is just to bring more tokens into circulation. After those 350 million tokens are in circulation, there will be no more staking like this. Anyways, right now for 1 month, 950K, 3 months, 952K. It's pretty even actually, it's interesting. 2 million rock stake for 6 months and 42 million staked for 12 months, right? Pretty cool. And then this is what I'm talking about for the projects that are raised. So far, we raised about $50,000 in BUSD for other people. And those people are having to earn interest, which is really cool. So let's go into the projects for a second. All right, so this is what I'm talking about. So anybody can come on here. You have to connect a wallet. Once you connect a wallet, there's a cool button here that will say start a project. Anybody can start a project. When they go through that process, they can basically talk about the business. It's really just a little platform of you to try and sell your business. So then when someone wants to get details about it, they can click on here, read details, and see what they're trying to do. So for example, this person is doing what I was doing. They're in the solar industry, right? And they're trying to expand their operations and marketing presence across the nation by scaling their lead generation with this investment. So they were looking to get $10,000. This was fully funded by the community. This guy now is going out, using that money, buying solar leads, and it's a cool little ecosystem, right? He's going to then go sell some solar, get paid a bunch of money, bring it back to the community, and everyone's going to earn 10%, and everyone's a happy camper. If he doesn't, well, then you guys get his rock tokens that he had to put in. So the catch is, in order to do this, you have to have 50% of the equity that you're trying to raise. So he had to put in 50% of this $10,000 at the time when he started this. So if the rock token was at 3 cents, 4 cents, 5 cents, whatever it is, it needed to be $5,000 worth of rock that was inside or that's in this pool. And that's kind of how that happens. On the other side, when he does pay this back, which I'm assuming he's going to pay this back, he will then have something that shows that he has completed a project, right, with the profit, just like down here how Mr. Mike did that as well. And then the next time he does this, he's going to basically build some credit within the community. People will trust him. They're going to know, he's already completed, a full project or a loan, however you want to phrase it. And so this is a really, really cool thing that no one's doing in the crypto community. Another thing is, of that collateral, there is a 5% fee when they get funded. Well, what are we doing with that? We're giving it back to the Bedrock community is what we're doing. So we're taking of that 5%, some of that is going to be burned or into a locked wallet that no one has access to. It's just called a burn wallet. We're not actually burning the coins, but they are going somewhere where they're lost to try and just build the floor up. And then another portion of that is going to actually go into earning Bitcoin. Pretty cool. All right, so I did say that. So you can actually buy rock, right? You can come in here, and in the next 2 hours, there's going to be a drip of $300. So where's that $300 coming from? It's coming from the Bedrock project. So as more projects come on the page, people have to buy rock in order to do a project, which is really cool. Then when they're doing the project, there's also another way for you guys to earn some money while you're waiting, right? So if you want to invest into that project, you have to use BUSD, which is a stable coin. But in the meantime, you can also use your rock tokens and deposit them here. And let me tell you how it works. So down here, so you stake your rock and passively earn BTCB every day. The user deposit section to invest for rock. Yeah, so right here, this is where you would deposit it. And then there is 10% fee on the deposit and withdrawal. Okay, so when you withdraw, basically your rock tokens or deposit, there is a 10% fee. And what's happening with that? It tells us right here. Okay, so 2.5 is instantly distributed to rock stakers in this pool. So if you get in early on this, it's pretty cool because as you can see right now, the pool balance almost has a full Bitcoin, a little bit under a full Bitcoin. And what happens though is as people put in the rock, if you're already in this, it would say right here, my pool share, and it would tell you the percentage. So not only are you going to earn Bitcoin in this, but as more people come into this, you actually get a little bit of their rock tokens as well when they come in and when they leave. So as long as you have a percentage of the pool. Okay, cool. Next, let's see. 5% is sent to a dead wallet because we want to continue to grow that. So just kind of increases the price floor. And then another 2.5 is sent to develop and marketing so we can let people know about this, right? So every day, 1% of whatever's in the pool, which right now is just about a Bitcoin, 1 Bitcoin at the moment. So roughly, $30,000. 1% of that is going to be dripped, like you can see here. So of this $300, depending on your percent of the pool, will determine how much money that you're going to get on a daily basis. It's super cool. So as we bring on more projects are funded. 2.5% of their collateral is essentially converted and added to this pool. So super, super cool little ecosystem here. There's a ton of different DeFis out there that are Ponzi schemes, as we saw with Luna and a couple other. There's a bunch of them out there. I'd say 99% of all cryptos out there do not have functionality. Like they don't think about it. They're just thinking, oh, it's gonna the price is gonna keep going up forever. It's just gonna keep going up forever, so we can make something around those lines. But it doesn't. That is the dumbest thing, in my opinion, of how to build a company or build an ecosystem. So what we're doing is we're actually taking real money from physical businesses or individuals that are running a business, right? And it's just crowdfunding, and you're giving them your money. They use it, they make more money, and they pay you back plus some interest. So super cool way to get started in this. If you guys do need help, you don't know how to get into something like this, we do have a crypto class. It's the oneononecryptoclass.com. Just put one, the number, ON, and then the one again, cryptoclass.com. You guys can check that out as well, and one of us can help you out. Or there's plenty of videos online of how to use MetaMask with BNB on the smart chain. So we are on the Binance smart chain. You just have to connect having a MetaMask to the site, and you can go ahead and start earning Bitcoin daily. So, all right, guys, that's pretty much it for this video. And yeah, so I'll see you guys in the next one. Peace.